Hello, my name is Fasha Alzalfa Efran. I'm from Institut Teknologi Bandung, Indonesia, and today I will be presenting my final project, which is about the influence of influencers on retail investor investment decision making on the cryptocurrency markets. So, for the abstract, this studies basically examines how the social media influencers affect retail investor decisions in the cryptocurrency markets by using a quantitative approach, and it explores how influencers' content could affect the retail investors directly, where trusted influencers can strongly impact investor risk perceptions, often leading to impulsive decisions in the volatile crypto markets. Then, for the backgrounds, as we know, since 2009, the invention of Bitcoin has started the cryptocurrency revolution as a new investment options, drawing attention from both individuals and institutional investors that seeking for a significant returns. However, this high growth sector lacks robust regulatory oversights, leading to an extreme price volatility and heightened risk of fraud. There is also the effect of influencers who will significantly influence, particularly amongst younger demographics of investors. They simplifying complex crypto concept and fostering trust, and they play a crucial role in driving adoptions. Yet, the absence of clear regulations while influencers promotion raises serious concerns about the spread of misinformations and inadequate investor protections. And then for the problem statement, as we know, the cryptocurrency market characterized by a high volatile and lack of regulations that present a significant challenge for investors. There is a limited access to reliable informations. Uh, there's a rapid innovation, and there is also a big potential for manipulation and bias in the market, and it also caused by the nature of the market, which is decentralized, that create complex and uncertain environments. And then for the research question, these are the three main research questions. What is the impact of influencers on the overall individual risk perception and management on the market? How does trust in influencers and online communities shape retail investor decision making? And how can retail investor improve their ability to critically evaluate informations from the online platforms? And then there is for objective in this research. It's to analyze how influencers driven content could shapes retail investors perception risk and rewards, and then to evaluate the influence of trust and emotional appeals on the investment decisions. We want to assess risks from misinformations and market manipulations in the crypto market. Last but not least, we want to propose strategies to improve investor decision making and protections. Then for the literature review, this is the three main variable that I use for the literature review, which is trust in influencers, perception of risk, and retail investor decision making. And this is the conceptual framework for my studies, which is made from three hypotheses from those three main variable as I mentioned before. And then for the research and design methodology, I will use quantitative method in this research, and uh, and it will be used self-conducted survey that the data will be analyzed using statistic tools, which is in this case SPS. Then this is the track of the research. We start from the population and sample, data collection through a survey, data analysis with the software, and then we jump to the conclusion to give propose recommendations. And then for the data analysis itself, as I mentioned before, I will use three main data analysis, which is descriptive analysis, will be used to provide an initial overview of the characteristics of the data collected from the respondents. And this in the analysis were aims to understand the general data distribution patterns, and then regressions analysis. In this study, I use multiple linear regression analysis. Uh, which is employed to measure the relations effects on the independent variables and the dependent variables. And then I also use correlations analysis to evaluate the strength and direction of the relationship between the variables. Then for the results and descriptions, for the descriptive analysis, as we can see, most of the respondent is female in this case, and they are coming from a quite young age of group, which is from 15 to 29 years old. And then regarding the occupation, the majority of respondents is 70% are employed, which is indicating a high level of financial independence or decision-making capacity within the sample. And then for the income levels, further provides insight into the economics background of the respondents. Most participants, which is 52.5%, earn a monthly income between 5 to 10 million rupiah, which is a middle income, which is considered as middle income in Indonesia. Then for my regressive analysis, as we can see here, where the study used multiple regression analysis to assess how perceived risk, in this case X1, and trustworthiness, in this case X2, affects investor decision making, which is Y, and the R value of 0.767 shows a strong relationships, while the R squares value of 58.8% means that this two-factor explain 58.8% of the variations in the investor decisions, and the remaining 51.2% is influenced by other factors like financial literacy and access to informations. And then for the ANOVA test also show that the regression model is statistically significant with the F value of 26.37, confirming its relevance for the predicting investor decision based on perceived risk and trustworthiness. And then for the coefficiency test, the analysis shows that perceived risk has a regression coefficient of 0.131 and a significant value of 0.436, which indicating it does not significantly affect investor decision making. This could be due to the Indonesian investor often ignoring the risk analysis, leading to reliance on social media or third-party informations. And there is also a lack of financial literacy and low reading interest also contribute to the poor risk understanding, making the investor vulnerable to fraud. But on the other hand, trustworthiness has a regression coefficient of 0.679 and a significant value of 0.000, showing there is a significant positive effects on investment decisions. And this highlight the importance of trust in influencers, which greatly influence the investor behavior. However, the misplaced trust in the fraudulent scheme can lead to financial losses, as in Indonesia, where recommendation not only come from influencers but also from friends, family often drive the decisions. And then we move on to the correlation analysis. As we can see, on these analysis, we try to find the how strong is it the correlation between those variables. First of all, the correlation between the perceived risk and investor decision making. There is a moderate positive correlation with 0.594, indicates that the higher perceived risk evaluates investment decision through financial literacy that can mitigate this effect. Other than that, trustworthiness and investor decision making have a strong correlations, shows that the trusts have a significant impact decisions, highlighting the importance of reputations and transparency. Then last but not least, perceived risk and trustworthiness also have a strong correlation by 0.702, suggests that investor trust is an entity aligns with the perception of risk. And then for the result, as we can see, this is the result of the this research, where trust in influencers and online community has a strong impact, that explaining 70% of investment decisions, while perceived risk have more minimal influence. Then we also find that actionable insight from influencers significantly affect decision, with 65% of investors relying on such information. And then we also find something on emotional support where 75% of investors value the emotional support and sense of belonging from these online platforms, boosting their confidence in these cryptocurrency volatile markets. And then last but not least, we also find uh, while online communities and influencers provide an easy access to informations and emotional reassurance, they also expose to investors to misinformation and herd mentality with 40% acknowledge of this risk. Then I come out with three recommendations for this research is that to be investors have to be critical of informations where retail investors should be more carefully uh, while evaluating the information from online communities or influencers and verify it with a trusted source of avoid misinformations. Then we can also increase the financial literacy programs to educate the influencers about the cryptocurrency market to help them make their own analysis. And then we also will try to empowering the investors itself by uh, giving a programs that teach cryptocurrency about risk and how to make an independent decisions are important for the retail investor. Okay, that's all for my presentation. Thank you.